Welcome to the Pulse Check
Thank you.
podcast. Dennis Khoo, great to have you on board.
Well, thank you for having me.
Yeah, Dennis, and thanks for bringing your book, the famous book on driving digital transformation, and also your second one. Of course, you're well known in Singapore for your authorship, of course, in digital transformation, also your allDigitalfuture playbook. But besides that, of course, you have a long journey of having worked for biggest corporates in financial services. You really have a long-standing record of not only writing about, but implementing digital transformation, the expert. So really proud to have you on the podcast. But before we dive right into the topic, you know that I typically start with the question, what makes you you? What makes you Dennis?
Well, I think I'll answer in two parts, right? I think professionally, what makes me different is the diversity, both in education and experience. From an education perspective, I was a computer engineer. When I graduated, coded in C++. Then went on to get an MBA. So I had an engineering degree plus business. And then later in career, took a PhD in international business. So very diverse education background. And also in banking, I had the opportunity to do almost every single role in a consumer bank. So combining my first 13 years in technology and then subsequent almost 20 years in banking, it's quite a different profile, I would say, from a professional perspective. Personally, I'm kind of, I guess, in my third stage of my career. First, having been in technology, and then the last 19 years in banking, and now having successfully transitioned to a third career, advising companies, writing, teaching transformation, as well as doing leadership, coaching, development, assessment. So I guess those would be the two things that would come to mind.
Absolutely. So we have one thing in common, as I'm also an engineer by train, and also developed C++ or even Fortran 77 back in the days. So I think we will have a lot in common also in the conversation today. I mean, of course, I know you or followed you since a while, but I read up also quickly on your journey again, and it's quite impressive, of course, as you said, 19, almost 20 years also in big corporates, and would love to start there with also at UOB tomorrow, Digital Bank, one of the first digital banks launching in Thailand already 5 years ago. So having the combination of technology and business, what brought you in that situation over your career to really drive the new ways of banking? How did you get there? Maybe tell a bit about that story and what you learned from it, and why it then led you to write the book of digital transformation.
Well, after having run all the various products, I started in marketing actually. I started in marketing and banking because I had done quite a bit of marketing when I was working in Hewlett-Packard. And so my first role in Standard Chartered was actually head of marketing. And then after that, I also went into data and analytics before becoming the wealth management head. And that involved mainly deposits, insurance, investments. And after 3 years, timing-wise, very fortunate, just before the global financial crisis, I transitioned into lending, which had to do with mortgages, personal loans, credit cards, all the products that I hadn't done when I was head of wealth management. So I think that diverse career helped me when I eventually became the head of the consumer bank, because the head of the consumer bank is more general manager of general managers, as I would call it, because it's really managing very different, diverse portfolios. They have very different characteristics. So I did that in Standard Chartered, and then took the same role now in a local multinational in UOB. Before 2017, I was asked to build a digital bank from scratch in Thailand and then in Tunisia. And so I think it prepared me very well for that role. But as I like to tell people, it was still probably one of the most difficult, probably the most difficult assignment I have had in my 30-year career. And after going through the experience and thinking about what we did right and what we could have done better, actually it doesn't surprise me that the records show that actually most transformations in large complex companies don't end up well, because there's so many moving parts, there's so many things that can go wrong. So it's actually a miracle if it does go correctly rather than the other way around.
Yeah, that's an interesting one. And I wanted to also ask, I mean, with also the trend of digital banks, virtual banking initiatives from the governments in Hong Kong, Singapore, launch of those new virtual banks in Hong Kong, it actually also started around that time, 16, 17, 18. It's, of course, a bit easier if you have a greenfield approach. You can really start maybe according to also your guidance from the book, rather than having a legacy that you need to work around with. Maybe also on that note, what are some of the main challenges you see in the really incumbent traditional banks if you want to really modernize, digitize?
Well, I think I'll start with the observation that I think banking is a very unusual industry. Number one, it's a very important industry because it deals with money. And therefore, it would always be regulated. There is a big mismatch of costs and subsequent revenue and profit in banking. So a lot of the costs go in first, and then you make money over time once you have kind of perfected the model. And of course, it's a very good annuity stream. And even today, despite a lot of competitive pressures, there's quite a lot of banks that still have a 50% cost to income ratio. And that's quite amazing, considering that, few companies make that kind of margin. It's also, especially the retail side, a business of just sheer demographics. And it's a local business, not a global business. So when people talk about building a global bank, there are, in my opinion, going to be very few global banks, because after the global financial crisis, it was recognized that one of the dangers of that model was that capital was not locked necessarily in a country where you had a big presence. And that's important because if a bank fails, then you need to figure out how you're going to pay the depositors. And so capital was no longer freely mobile. Regulatory scrutiny increased. And as a result of that, the profitability of banking on a global basis, in fact, it calls into question whether retail banking is even a global business, because it's fundamentally very local. Compared to the likes of Google, Facebook, Airbnb, and people often forget that those businesses are pure software, and software transcends borders quite easily, and that's why they have not unusually a 40x PE ratio. So I think a lot of people don't understand those fundamentals about banking. And when you add those fundamentals into banking, then you find that it's not what it appears to be on the surface. Because on the surface, a lot of startups think that it's a technology business that needs to understand risk but I think it's a risk business that needs to that uses a lot of technology.
That's a good way to frame it. And yeah, absolutely. I was wondering, Hong Kong, Singapore, that are comparably smaller markets with 5 to 7, 8 million people. If you look at the digital banks, virtual banks that are very successful,
Yes.
they're either in China or Brazil, where there's really a huge market. So is it only, and especially when we look at profitability of those virtual banks, is this only possible if the market is large enough?
I think that's a very shrewd observation. I think first, to me, the easiest path would be, to go for the bottom of the pyramid in what is typically described as a disruptive innovation. And the true definition of disruptive innovation means that you're going for a segment that the incumbents do not want to serve. Mm-hmm. And so that would be the really underserved and the unbanked. And so in order for that to happen, you need two characteristics, right? You need a large pool of either unbanked or truly underserved, and you need a large population. Mm-hmm. Because the problem with that business model is that you make even less. And therefore you need a large number of people for you to recoup the large upfront costs that you need to put in to build a bank. So it's not surprising, therefore, you find that those countries are, China, Brazil, or rather South America, where Nubank has really made a good strategy of attacking that segment. But when your demographics fall below a certain number, it gets pretty hard, especially if it falls below a certain number and it's fairly well developed. Yeah. And that tends to describe Singapore and Hong Kong. And one of the things that I was very deliberate about when we were building Tomorrow was that I felt that one of the key characteristics, right, when you're doing this, is that you have to launch with at least double the net promoter score of the industry. And net promoter score here is simply one measure of how good your experience is. And because if you launch and your experience isn't double, triple the industry, you immediately have a problem where, what value are you bringing? And when you are dealing with a more developed banking market, what you will find is that it's what I call the experiential quadrant rather than the breakthrough quadrant. Mm-hmm. And what do I mean by that? You're not going to find one or two things that you can really focus on that will allow you to grab enormous share. Because those one or two breakthrough elements don't exist. Mm-hmm. And hence you have in a way, kind of a breakup of what people typically call minimum viable product. So minimum viable product exists in the breakthrough quadrant because the characteristics of the problem you're solving allow you to find one or two things that can make a 5x breakthrough in performance over price. And that's not universal. It doesn't exist everywhere. Mm-hmm. So when you look at banking in Singapore and Hong Kong, it doesn't exist. So for example, in Tomorrow we had to, and for that matter in Southeast Asia, because people think that, because Southeast Asia is very diverse, but actually the banking standards are relatively high. Of course, they're different across countries, but they're relatively high. And, that's kind of also the difference between, if you look at perhaps South America and Southeast Asia, that's one of the characteristics. And because it's relatively high, you can't really find those one or two things, except if you're going for the unbanked. But that, has a whole other set of issues that you need to contend with. And, the unbanked in Southeast Asia is found primarily in Indonesia, Vietnam, and the Philippines. These three countries account for all, of the unbanked segment in Southeast Asia. So what you end up with is you need to bring out, a lot of new features because you need to achieve that doubling of the net promoter score, tripling of the net promoter score in order for you to be able to make a mark. So when it's like, I would, the analogy would be like a car. When you drive a car, you think it's easy, right? You just, steering wheel, brake, and even now with electric vehicles, it's even easier. You seldom use the brake. It's just the accelerator, right? But when you look under the hood, actually, a car is very complex. Just like an aircraft is very complex. So people don't see that. So they're just looking at the top of the pyramid, the top of the iceberg. And when you actually look at the whole iceberg, it's actually very, very complicated.
Yeah. Yeah, on that note, I mean, you said, right, the Net Promoter Score that you need to double as a new incumbent. When we look at then the traditional banks, how can they then learn from digital banks and fintech companies, as they're of course established, they already have a lot of clients, but there's for sure a lot of things they can and should learn?
Well, it's an interesting question in the sense that there's a deeper answer to that question, right? If you look at what it's all about, it's really not about digital. It's really about better and better customer experience at lower and lower costs, powered by digital. But digital is a means to an end. If you don't couple all this focus on digital enablers with the ethos of serving customers better and doing things cheaper, then it kind of doesn't work out in the end, because people forget that actually technology is the enabler. That's not the result you want. The result you want is not just more and more technology, but you want better and better experience at lower and lower costs. And I think that's something that large companies find very difficult, because if you look at large companies, and today I really focus on helping large complex incumbents transform. If you look at a large company, they've easily got 15, 20 departments. And you also cannot imagine a large company with no departments, because you'll be chaotic, because nobody knows what job they're doing, right? So in a large company, you have to compartmentalize the departments, because that allows you to manage and specialize. But what it introduces immediately is silos. And the difficulty of breaking through those silos is the difficulty of actually getting good customer experience, because you've got to go horizontally. And therefore, one of the difficulties of most large organizations, banks included, is that it's very difficult to achieve that customer experience, that good customer experience that's 2 or 3 times. In fact, if you look at the way the Net Promoter Scores deck out, most banks are kind of in the same range. And maybe you have in the market 1 or 2 exceptions. And if you couple that with the fact that there's not 1 or 2 things you can do, right? You got to do many things well. You got to be good at process. In other words, you've got to really pay attention to the small things, because the small things make all the difference. In a situation where it's not 1 or 2 things, it's 10 things, 20 things that you need to focus on to create that great experience, which is the situation in banking in most more developed, banking environments. And so when you put that together, then you find that there's just a difficulty of concentrating on the small things. You need a certain DNA, and a lot of banks don't have that DNA. And I like to joke that most senior staff in a bank would rather attend the strategy meeting. They'll send the most junior people to the process meeting. But if you're not good at process, you can't possibly be good at experience, right? If you're not good at process, you can't digitize, because what you're digitizing is the process. And so when you couple that, all those factors together, it's actually quite difficult for a bank to continually be focused on customer experience. And businesses are very short term today. If you're listed, it's quarterly. But customer experience is not a quarterly thing, right? It's a long-term thing that you do to serve customers better. And by serving customers better, you make more profit in the end. And it's also something that needs to come from the top. I find that it is very, very difficult to be customer-centric from the bottom of the organization. It must come from the top, because it's a belief that by serving customers better, we make profits the right way. So when you just take all those things I've talked about and you put them together, it's very hard for large incumbent banks to be very good at customer service. And so even despite whatever digital capabilities we have, I think most people would still say there's room for improvement in banking experience.
Definitely, yes. I mean, my next question, you partially answered it with what are the KPIs in digital transformation project. Of course, the number one KPI at the end of it is the customer experience. If that doesn't improve, then it wasn't successful. But maybe on the journey of a digital transformation project, what are some of the key KPIs you would look at?
Well, if you take banking, right, it's particularly difficult. Because if you look at what really is digital, what are the functionality in a digital bank or what are the functionality in digital banking, a lot of it is funds transfer, bill payment, which is kind of universal, right? You can't transfer to a few banks only, and you can't have a very narrow list of bill pays if you want to have a net promoter score that's very high. And so if that's the majority of the functionality, and those are quite universal, then actually it's very hard to differentiate. So immediately you have a problem of how can you really differentiate. And we spend actually a lot of time looking at how we could design something that could be very differentiated. And eventually we, after many, many iterations, right, settled on basically three things, right? One is that the basics should be very good. Whether you're onboarding, granting credit, transacting, or even terms and conditions, right? Those would be the way banking should always have been, seamless, intuitive, easy. And if you get that right, then your net promoter score should be much higher. And then the next tier up is really about, if you get that right, most of the time there won't be problems. But if there is a problem, then you're going to solve it, very, very effectively, very efficiently. So it's really great service at very low cost. And the way to do that is really then to use digital capabilities. And we actually introduced the first conversational chatbot in Thailand. Thai is quite a difficult language.
Yes.
Today, of course, Gen AI has kind of solved some of the complexity in understanding the context and syntax of human language. But if you can do that well, then you can provide very high service at low cost. Because I know banking troubleshooting isn't that complicated. Right? It's not like if you can't start your car, what could be wrong with it, right? Could it be the spark plugs, the electrical system, the petrol? There'll be many different factors. But banking service tends not to be that way. And we also discovered that you could actually eliminate one of the pet peeves in banking, which is, why do I have to repeat all this to you if I don't get it resolved the first time? And that's very difficult to do it with an analog call. But with chat, you could design the chat window such that it all pops up to the agent, when the agent is having that conversation with you. So those were all the things that were designed very well. And then at the final tier is really using data to prevent problems. So if you have two accounts and one has a regular debit, but you haven't linked it to your salary, then there are always scenarios where you forget to fund the account and the regular debit fails. And that is a scenario that we can pick up, banks can pick up because of the pattern. And we can actually alert you that it's going to fail tomorrow, right? And to fund the account. So that's an example of preventing problems from happening. And so when you deck these three things together, then I think you have a very good design and blueprint for customer experience. And of course, designing in how do you lower your cost to acquire, how do you lower your cost to serve, so that you also get that lower cost element that's important. So this was how we went about it. And I think different industries, in fact, the one common thread is that across all major services, it tends to be fairly similar. It's all about better customer experience at lower and lower cost. Whether you're talking about healthcare, government services, telcos, banking, right? There's that similarity. So I do think that one of the problems today, especially at the very top team that's managing the transformation, there's just too much focus on a few of the drivers, typically around technology, but not enough focus on how you take a holistic approach, right? That you need to look actually at all dimensions, customers, business, capabilities, people, and leadership. And you need to orchestrate the drivers, because in a situation of a large company that's very complex, these drivers tend to influence each other. And the top team's responsibility is to orchestrate these moving parts and look at it as a whole system and to ask the right questions and not necessarily, provide the answer. So in my study, I think in a lot of companies, why transformations fail is because the top team isn't doing this.
Yeah, that's a very good point. And I mean, to summarize, banking, I mean, one of the oldest industries, is actually quite simple. I think in Brad King's book, he describes it that basically it's debit, it's credit, and it's transactions in between, right? It's the core three elements. It's not much more. But of course, technology is evolving and dramatically now in the last few years, of course, also with Gen AI and so on. I mean, you come across, and also looking at your book, as very detailed, very thorough, with a very clear structure. And your book gives a very good guidance in terms of how to drive digital transformation. While banking, again, is not so different of 100 years ago to today. Of course, technology evolved very rapidly. So looking at your book, would you write the book differently now than 5 years ago? Or would you write it then also differently in 5 years from now? Or do you think that the approach that you describe will actually be more or less the same?
It's a great question. I don't know if I know the answer, 5 years from now. I do think that banking is a simple business model that's very complicated to execute. So a lot of people focus on the simplicity, but don't understand the complexity. Mm-hmm. So it's not a simple business model that's simple to execute. It's a simple business model that's very complex to execute. And therefore, it requires, for the reasons I've mentioned, right, substantive attention to detail that is often missing. It's not one of those businesses that you can find one thing that can produce that 5x difference in performance over price. And 5x is generally the hurdle that would allow you to make the switch from whatever service provider you're using now to an alternate service provider. And you can get that kind of characteristics in certain breakthroughs. Typically, they are founded by startups, those breakthroughs. So, it could be something as simple as, instead of hailing a cab and you don't know when the cab is going to come, you can see all the cabs around you, and who is likely to be, the cab that, and when he's going to come, right? So I think we often mistake experiential breakthroughs, where you need to deal with many small things and thread them together to create an overall experience that is 5x better in terms of performance price, versus, can I do one or two things? And when you start off and you mix those things up, I think it's already getting off on the wrong footing. So when the startups use banking, they see a simple business model that can be disrupted by technology alone. And then they find that it's not true. So you almost see very few startups in banking that have made it, right? And of course, it's easier if you're a new bank, and like I mentioned, right, it's a disruptive innovation, and the banks don't want those customers in the first place, because then you grow big, in an undefended territory. Whereas if you're Monzo or Starling and you're going after the banked population, it's much harder, because the banks will respond because those are bank customers that they want to protect. And then it's a more difficult journey. So if you look at I think there was like 200-300 banks trying to start up globally, but very few of them have actually succeeded for those reasons and characteristics that I just mentioned. So, I guess the best way to sum it up is that, it's a very simple business model. And not only that, but the business model hasn't changed. Yeah. So it's not truly a disruptive business model change because you are still making money in terms of the difference between deposits and loans. And worse still, you're not making much fees because the fees have been competed away. And if that business model is unchanged, right, from traditional banks to startup banks, then is it truly a disruptive business model in the first place, right? Mm-hmm. And so the best way I can summarize it is a simple thing that's very complex.
Yeah, brings me to the last question, looking a bit into the future, the next big trends that you will see, coming, of course, with also from the startups, the fintech, that push the boundaries, first principle thinking, first principle design. What do you think is going to come with also AI, Gen AI, some of the big trends? What do you...
I personally think that there will be a significant breakthroughs that are going to come, not only with AI, but the convergence, robotics and AI, genetics and AI. And I think there will be significant ability to harness these technologies together and make significant breakthroughs. But I do think that for large companies, you can't really copy the startup wholesale because your conditions are very different. You've got lots of existing processes, mindsets. If you're a big company and you need to transform, likely you have been successful in the past paradigm, but now find yourself needing to really reinvent yourself. And so the characteristics are very different. And today we get all muddled up. For example, banking is a complex industry. It's regulated, it's very important, although the way you make money is simple. And when you really think about banking, it's not that easy to make that breakthrough. So I think in the end is really about how you think about the problem, how you're going to connect the dots. But there's a lot of hype in the market today, so it's very difficult to figure out what works, what doesn't. If you take Gen AI, I think it's a significant breakthrough because you now understand not only the context, the syntax, but the idiosyncrasies of language. But it doesn't really understand language, right? It just understands the pattern of language, which is a complex pattern. And so now with every man-machine interface, you have a new way, right, of interacting. And when you connect that to the ability to write macros, you connect it to robotics, you can actually patch a whole bunch of things together. But you still got to look at the use case, right? I mean, the obvious use case are in where there is a human-to-machine interface, right? Or a human-to-human interface that you can replace with a human-to-machine interface. The rest of it might be hard to monetize, like doing an initial deck of slides, writing a speech. Those, I think there are certain companies that are in a position to monetize it, like Google and Microsoft, but I think very few other companies are going to be able to monetize it because it's like email. It's pervasive, but yet it's very hard for you to justify the expense of it. So I think for large companies, it's the complexity that kills you. It's the non-clarity. And then trying to think that you're always in the breakthrough quadrant, you can do one or two things, which is not the case, really kind of messes the whole thing up. And so I think this is the problem. And it's going to get more complicated, not less. And I think the biggest issue, therefore, in large complex companies where I focus on, right, is that there are no methods that large companies have adopted to handle and manage this complexity.
Yeah, and really interesting, of course, to follow the conversation, but also to then read your book on digital transformation, because as you said, the complexity is high. And I, of course, as a consultant, also used some of your methods and tools. And I think we both want to really make sure that the banks and complex big financial services companies can transform to the better, as we said at the beginning, for a better customer experience, which is the ultimate KPI. Thank you so much,
My pleasure.
Dennis, for
Thank you
coming
for having
over.
me.
We find you, I guess, on LinkedIn, social media. Same also for us, Pulse Check Podcast on Simpulse 8 LinkedIn. Thank you once again.
Thank you. It's my pleasure.